right, good evening, everybody. Welcome to another weekly Wednesday webinar after 2 long weeks without you all. But of course, we needed to take a break to enjoy with the family, eat some turkey, have mashed potatoes and mac and cheese, and of course, see the Cowboys winning. Of course, we're gonna emphasize that, Milton. So thank you for everybody for being here on this webinar. We appreciate you for taking the time to be here with us, and we're gonna go through a great presentation from goals to goal. A deep dive into credit union savings accounts. We're gonna, go into details as to how you can take advantage of your savings, especially here at the United States Senate Federal Credit Union. We're just gonna give it a couple more minutes for people to join, but we appreciate each one of you for being here with us. And I see so many familiar names on the attendee list, so we appreciate each one of you for being loyal viewers of our, I almost say podcast, but it's not a podcast, webinar. So thank you very much for being here with us. And also, we just wanted to emphasize that if you have a specific topic you would like us to present, you are always welcome, to email us and give us your suggestions, and we will gladly go over them and see what we can do for you all. But thank you very much for taking time of your busy schedule to be here with us in another WWW series, which is Weekly Wednesday webinars. 6:02, Milton, ready with the intro, sir?
I guess I am, Eddie. But you know what? I was so excited to start the intros, and obviously, as you mentioned, we missed all of our members, but we needed a week off, so hopefully everyone had a wonderful Thanksgiving, was able to spend time with their families, and give thanks for everything, all the good things that have happened in this 2023. I know we are, and then one of the things that we were thankful of, it's going to be, it's you are members, and especially the people that has we had received so much support, and a lot of great feedback in regards to the webinar. So we're doing so. Thank you, thank you, thank you. But Eddie, you almost destroyed it when you mentioned the C word, which I'm not going to say it again. But for those football fans, hope you all had a good week. But I'm all right. I'm doing okay. I'm sure we're gonna get better, next year. So with that being said, again, I'm excited to welcome everyone back. As Eddie alluded to, this is an exciting webinar. It's all about goals to goal. So we're gonna do a deep dive into the amazing products that we have here at the credit union when it comes to savings. So it truly is a great time to look into the different products that we have to offer, so that you put your money into work and not just let it sit in an account that is not making you anything. So if that's what you're here for, I'll tell you right now, you're in for a treat. And with that being said, as always, let me go ahead and introduce the amazing panel. I'm sure you're very familiar with all the faces that you see here. And without any particular order, we have Eddie from our marketing department. He is in charge of the keeping track of the Q&A, the chat box as well, the chat feature. So that means that if you have any questions during this presentation, please do not hesitate to submit those questions either on the chat or the Q&A feature. Also, depending on the time, if we have enough time, we're going to be allowing some of our members to have questions to come in and ask those questions live. And as always, it is our commitment to make sure that we answer every question before we leave the webinar. Even if we have to pay an additional overtime, I know I saw a comment that came through there, so we will do that. That is our commitment from day one. And just because we're getting closer to the end of the year doesn't mean we're gonna all of a sudden change that. So again, any questions, concerns, please make sure to submit those, and Eddie's going to be keeping track of those, along with our content queen, Carrie Lazar, who I'm sure you all are very familiar with as well too. So if you enjoy what you see, all the graphics and everything, all the information that we share with you, all of that comes from our wonderful Carrie, and she's also going to be assisting Eddie as well too with the chat and the Q&A. I'm sure you all are familiar with myself as well too. I'm the membership development officer, and that leaves me with our very own somebody that has so many years of experience in the banking industry, has been with us with the credit union. Actually, we just celebrated her 16th anniversary just last month, if I'm not mistaken. Kim, please correct me. And she has a lot of wealth of knowledge and experience. And with that being said, our presenter for this evening is our very own Kim Freely, or membership development analyst. So Kim, I know I talk too much. Let me pass it on to you.
Thank you so much, Milton. Great job, panelist team. Welcome to our members. Thank you so much for joining us this evening. We are thrilled to be back. It's hard to believe that it's almost December 1st. I will say December is one of my most favorite months of the year. I love the holidays. It's time to start strategizing, making budgets for 2024. And this webinar hopefully will help you to get started. It is always our goal to give you resources to help you make the best financial decisions for your financial future. We truly care about your financial future. I always say, refer us, let your friends, your neighbors, your family, your colleagues know about our credit union. We truly take pride in servicing financial products and services to our members. Also, I wanted to mention on our website, if you go to www.ussfcu and you go to contact us, you can send an email to our CEO, Tim Anderson, to our board of directors. Let them know how these Wednesday night webinars are impacting your financial dreams and goals. Let us know how we're doing. We really hope to continue to offer these in 2024. And again, we would love your recommendations as to what you would like to see in these webinars. So I'm talking too much. I'm going to go ahead and start the webinar From Goals to Gold, a deep dive into credit union savings accounts. Again, we want you to make the most of the money you have on deposit. It's all about strategizing and making sure that you're making the most on the money that you have. We truly care about that. So let's dive in to the world of interest yielding savings accounts, and we're going to go through several this evening. So imagine your money not just sitting there, but actively working for you. That's the whole goal. Interest yield savings vehicles, they really are, like we were talking about football, they are the MVPs of financial planning. They're the cheerleaders for your goals, constantly boosting your savings game. And when you park your money in these vehicles, like high yield savings accounts or certificates of deposit, which we all know we call them CDs, they pay you back in the form of interest. It's like getting a little bonus just for letting your money hang out in the right place. And tonight, we want to help you discern what the right place is, what savings vehicle is going to help you make the most. It's like whether you're saving up for a dream vacation, a home, whatever you're saving up for, it matters how and where you put your additional money, your savings, the money that you do not need to live day to day, so that you are going to make the most to make those financial dreams and goals come true. And we are the ones to help you with that. Now, remember, not all interest is created equal. So some accounts offer higher interest rates than others. It's like, choosing, let's say, the juiciest apple from the tree. The more interest you earn, the faster you reach your goals. So it is important for you to shop around, to look at who is offering what rates. We currently have some of the highest rates in the nation. And once you lock those funds into, let's say, a certificate of deposit, you are going to make the most of that money, and it's completely safe and secure. You can't lose, any of your money. You're just going to earn. So, we're going to turn your money into a little powerhouse, helping you crush those goals that you have set, one interest payment at a time. It's really, really important to us. So bear with me, you guys. Whoop. All right. Okay. So we talked about, sorry, hang on. So financial goals, setting clear and specific financial goals and creating a plan, to achieve them. There's short term, there's midterm, there's long term. Everybody typically will do a 1-year plan, 1 to 5 year, and then a 5-year plan. It's really important to sit down and do that either by yourself, or if you have a family, sit down and do that together. It's not only eye-opening, but it's actually a lot of fun, especially when you see what you have at the beginning of the year compared to what you have, every quarter or every 6 months, and then what you have earned at the end of that year. It's really, really fun to watch. So having clear and specific financial goals is really critical for effective financial planning. It helps to ensure that, you're making deliberate choices with your money, not just letting it happen by chance. You're actually really creating a plan for achieving them. So short-term goals, typically cover a period of up to 1 year and may include, things like saving for a vacation, paying off a credit card, whatever your goal, your plan is for that year. Medium-term goals typically cover a period of 1 to around 5 years and may, typically include things like saving for a down payment on a home, paying off a car loan, which is one of my goals for 2024. Long-term goals typically cover, a period of 5 years or more. Still very important to sit down and write out a 5-year plan. It may include things like saving for retirement. We're going to talk a little bit about those savings products as well in a few slides, or, paying off your mortgage. What a goal that would be, to actually get to the point where you are close to paying off your mortgage. By setting financial goals at each of these levels, short-term, midterm, long-term, you can create a roadmap for your financial future and make steady progress towards your objectives. If you don't have something to measure, you're never going to get there. So why are long-term financial goals important? And we've talked a little bit about this. You can focus on short-term financial goals relevant to your current situation. You may find yourself unprepared when you experience future life events. If you don't focus on that, for example, saving, and we've talked about this in previous webinars, saving an emergency fund. It's an incredibly useful short-term goal, but if you don't save money outside of that fund, then you'll likely be unprepared, for things like retirement. So long-term financial goals bring awareness to events that may be decades away and help to ensure that you'll be ready when they actually arrive. So long-term versus short-term financial goals. As you work to build out your long-term financial goals, it's really important that you understand how these aspirations differ from other types of financial goal setting. So while long-term financial goals focus on years down the road, years in the future, short-term goals are concerned with the present and, let's say, the very near future. So short-term goals can generally be accomplished within a year and are usually pretty easy to achieve. The whole key is creating the plan and sticking to the plan. Examples of short-term financial goals include establishing a monthly budget, and we can actually help you with that. We have resources on our website, and adding to an emergency fund, even if it's just a little bit each time you get paid or each month. Establishing short-term goals can help you achieve long-term financial goals by getting you on the right track actually early on. So interest yielding, that's what we're here about. Interest yielding savings vehicles are actually financial tools designed to help us as individuals achieve our financial goals by earning a return on our savings over time. That's what they are. These vehicles provide a way to grow our money beyond just keeping it in a traditional savings account. So let's talk about these. Here's an overview. Share certificates. We all know what share certificates are. A lot of people call them CDs, certificates of deposit. Here at credit unions, we call them share certificates. And they are just simply time deposits offered by credit unions. You agree to keep your money in the account, for a fixed period, and in return, you get typically a higher interest rate than a regular savings account. However, withdrawing funds before that term, that maturity, may incur penalties. So you definitely want to sit down and look at which term you are comfortable with and how much you're willing to put into that term, knowing that you're not going to touch it. And at the end, you're going to have much more than what you started with. That's the whole point of a share certificate. So let's talk a little bit about money market accounts. They actually are a type of savings account that typically offers higher interest rates than just a regular savings account. Here at the credit union, we do require that you have just a basic share account, just a regular savings account that you keep $5 in it. If it's a joint account, you keep 10. And that is how you are a member of the credit union. If it drops below that, you're not a member. So you do have to keep that in your regular savings account, but that doesn't mean you have to keep all of your excess savings in that savings account. Matter of fact, that savings account offers a pretty low interest rate. But if we offer money markets, if you want to keep the money still completely liquid to you with no penalty, no fees, it even offers check writing capabilities. Highly recommend a money market. So if you're sitting in this webinar tonight and you have a lot of money in your savings account, please call me, call the contact center. We can do it right over the telephone. At least get that money into a money market account so that you can be earning a much better interest rate than the regular savings. Don't keep it in that regular savings account. And then we can talk about the strategies and getting some of those funds into a certificate of deposit to earn even more money. We are here to actually help you with all of that. So we're going to also talk a little bit about IRA certificates. We all know that IRA certificates are specifically designed for retirement savings. They do offer tax advantages, and interest earned is tax deferred until withdrawn. So we're going to talk about non-IRA share certificates, and we're going to talk about IRA certificates. And right now here at our credit union, it's the same rate for both. So if you have IRA money in another financial institution and it's not earning a whole lot, you can do a financial institution to financial institution transfer, and you don't even see that money. It comes directly to the credit union. We put it into whatever you choose, IRA savings or IRA certificates. And again, it's important that you strategize those monies as well to make sure that you're earning the most, because retirement is important. And you want to make sure that you have exactly what you're going to need in order to live comfortably. So we offer the IRA savings vehicles and then the IRA certificates. So we'll talk a little bit more about that in just a few slides. So let's talk a little bit about the power of interest. I love this topic so much. It's literally like kind of like free money. I mean, if you leave your savings in an account that doesn't earn any interest, all you're going to have is that amount. But if you actually strategize and put that money into a certificate of deposit, a money market, you're going to see dividends each and every month and have more than what you started with. It's so exciting. And it's really good for even children. If you have children, grandchildren, set them up a savings account here at the credit union. They also qualify for a money market and a certificate of deposit, and it's as little as $1,000. So allow them to start watching their money grow. And I bet when they become older and more financially aware, they're gonna remember how you taught them to save and to earn. So, you know, we truly care about our younger generation as well. So interest rates, they're kind of like the heartbeat of your saving strategy. They determine how fast and how strong your money grows. Think of it, interest rates as you know, the fuel in your financial engine. When you choose a savings vehicle with a higher interest rate, it's like having a turbo boost for your money. If anybody has a turbo vehicle out there, my mother has one and it's very dangerous. Instead of crawling towards your goals, you're sprinting. Who doesn't want to sprint? Not physically, never want to sprint physically, but watching your money grow really quickly. So through the average yield on a traditional savings account, you know, is about 0.58%. Some high yield saving options are paying around 5% APY. That's on CDs, or nearly, you know, 10 times more than that. So it's really beneficial for you to get your money out of those basic savings accounts and transfer them. Money market, it's completely liquid to you. If you need it today, you can take it today. But really strategize how to make the most out of what you have. So these accounts won't do much to counter high prices at the pump and grocery store, but they will help you earn something. Talking about money markets here. So let's take a closer look at interest yields. So what you see on the screen, if a savings account paid, let's say 5% per year instead of 2%, the ending balances would look like the example shown on the screen on the slide. The higher the interest rate, the greater the difference between earning balances based on the frequency. We're going to talk about frequency of compounding. So it's important to note that the schedule for compounding interest and paying out the interest may differ. For example, a savings account may pay interest monthly, but compound it daily. Each day, your financial institution will calculate your interest earnings based on the account balance plus the interest that you've earned that it has not paid out. So the higher the interest rate of an account, the more frequent the compounding. Some people don't even realize this. The more interest you will earn over a specified period of time. Here's the good news. Here at the United States Senate Federal Credit Union, we compound daily. That's great news. If you have any money elsewhere, you need to ask that question. We compound daily, we pay monthly. So you can see the huge difference there. It's not just about saving, it's about making your money flex its muscles and work hard to bring your dreams within reach. And I can't say this loud enough. You really need to make your money work for you. And we're going to help you with the resources of understanding how it works and being able to ask the right questions. So Einstein called it one of the most powerful forces in nature, and it is true. He referred to it as one of the greatest miracles known to man. So hopefully that will help you as well. So let's talk a little bit about share certificates. I've been calling them CDs. A share certificate, it is a savings certificate issued by a credit union. It's a time deposit with a fixed term, fixed interest rate, similar to a certificate of deposit at a bank, except we all know that credit unions are better than banks. It's a low risk investment, very low risk. When you agree to keep your money deposited for a specified period in exchange for a higher interest rate than a regular savings account. So CDs differ from savings accounts because the money does need to remain untouched for the entirety of the term or risk penalty fees or lost interest. So CDs usually have higher interest rates than savings accounts as an incentive for lost liquidity. The good news about this credit union, and I don't know a lot of other credit unions that do this. Let's say you have $50,000 in a 1-year CD and you need a new refrigerator, or your car breaks down and you really need to use some of that money. We will let you take a partial withdrawal from that CD. So if you just need, as long as it doesn't go below the $1,000 minimum balance. So, and you've got 50,000 and let's say you need 3,000, we will let you take that 3,000 and you only get penalized on that 3,000. So it could be very minimal. And especially if you have a high APR on that CD, you're still going to continue to earn and make that money up. So we do allow partial withdrawals. We don't make you cash in that entire certificate and take that big penalty. That's why it's good to sit down and really look at what you can tie up into a CD and just pretend like it's not even there. Except, of course, to look at the money that you're making on it, because that's the exciting part. So certificate benefits, there are many. Guaranteed rate of return. So before you invest your money in a share certificate, you do choose the amount that you want to invest, the term, and the rate. Once you open a CD, you lock in at that rate. This lets you know exactly how much money you're going to earn over your CD term, whether that's in months or years, because we offer from 3 months up to 5 years. In contrast, rates on regular savings accounts and money markets, they are subject to change without notice. So as long as you don't withdraw your money before the agreed upon term, you can count on receiving the full dividend when your certificate matures. So another benefit, of CDs is multiple term options. I kind of just gave way to that. Typically, they're from 6 months to 48. Ours, we actually go from 3 months to 5 years. When you agree to a specific term, you essentially give up the ability to access that money for a set period. Everybody knows pretty much how that works. In exchange, the credit union guarantees a dividend rate that is typically always higher than what you can get from a basic savings account or even a money market. So in most cases, the longer the term, the higher your return on investment. Sometimes that's a little bit different. I think right now we have our highest rate is our 2-year rate. So go out to our website, look at our rates. They are very, very competitive. And you can't go wrong here. You really can't. We truly try to offer our members, the absolute best rate, and we will always give you the best service. Another benefit is low deposit requirements. So while many investment products or accounts require substantial initial deposits, share certificates here at the USSFCU can be opened with as little as $1,000. That's why I was even recommending children, grandchildren. By offering a more accessible point of entry, share certificates stand out really as an excellent option for new investors who may not be able to commit large amounts of money to their initial investments. We don't require you to invest but as little as $1,000. So additionally, seasoned stockholders can use share certificates to diversify and stabilize more aggressive investment strategies. So low to no fee structure. That's what we are all about. The credit union mission is people helping people. The credit union industry has always been about low to no fee structure. We have a volunteer board of directors where banks have stockholders share and they make big money. Any money that bank is going to make, it's going to go to them. It's not going to go back to you like at a credit union. So another benefit of a certificate of deposit is that you may have a low to no fee structure. Some banks or credit unions don't charge a monthly fee to hold your money in a CD. Of course, we do not. This comes in handy because you don't have to worry about fees impacting the interest earned on your CD. The last thing you want is to be eaten up by fees. And credit unions are not about that at all. So while the absence of a monthly fee is a key CD benefit, it's important to remember that there could be other costs associated with a certificate of deposit. One example is, and we've already talked about it, we want to be completely honest and straight up front, and that's an early withdrawal penalty. Should you take your money out of the account before its maturity date, we may impose a penalty. So that's something that you really, truly want to look at before you lock your money in. Federally insured, we always want our members to know that their money is insured here at the credit union. It is insured, the U.S. government guarantees it, just like the Federal Deposit Insurance Corporation, which is FDIC, which is, they insure banks. The National Credit Union Administration, NCUA, insures credit unions up to 200 members, up to $250,000. I've said this in previous webinars. I want to say it every time. We can really look at how much money you have on deposit here. You can have as much as $1 million and it be completely insured. Just depends on how you have your account structured. If you have a joint account, it's insured for $500,000. If you add different beneficiaries, each different social security number will add $250,000. So you can strategize, structure your account to where you can have all of your savings here if you want it to be. So types of CDs, there's fixed rate CDs. The CD interest rate will remain the same until the CD matures. We do offer bump up CDs here, or bump rate CDs here at the credit union. So if you choose to open a bump rate CD, you are able to adjust your CD interest rate one time before it matures. So that gives you the flexibility. If rates go up, you could actually go in without any penalty whatsoever, and we will increase that rate. Typically, those rates are a little bit lower than the non-bump up CDs. But it still could be a really good choice if you think interest rates may rise in the future. We also offer jumbo CDs that are $200,000 plus. They have a higher interest rate. We offer small business account share certificates and small business account bump rate certificates. So, you know, if you have a small business account elsewhere, or you know someone who has a small business and could benefit from our business, small business services here at the credit union, it's phenomenal. There are hardly any fees whatsoever, whereas banks typically have really high fees for small business accounts. That's not the case here. And we have a team of small business executives that are, I mean, phenomenal. It's almost like having your own personal banker. So just want to put that out there as well, just for you to spread the word, or if you have a small business that you would like to have your business account here. And of course, there are IRA CDs, which is individual retirement, totally has to do with retirement. So let's talk a little bit about those individual retirement accounts. They do offer, so IRA certificates offer a secure and structured way to grow your retirement savings over the long term, which, depending on your age, that's what the retirement savings is for. It's to start early and earn money until you're ready to retire. So with fixed terms and interest rates, they provide predictability and stability for your investment. The tax advantages of IRAs, such as tax deferred growth or tax-free withdrawals, in the cases of a Roth IRA, really enhance that benefit, making IRA certificates a really valuable tool for achieving long-term financial goals. And like I stated earlier, if you've got IRA money elsewhere, you don't have to keep it there. You can do a bank-to-bank, a financial institution to financial institution transfer as many times as you want per year, as long as that money is not made payable to you and you don't touch that money. We actually do the work for you. It's real simple. So don't feel like your money has to stay where it's at if it is not here. So the benefits, there are lots of benefits for IRA certificates. An individual retirement account certificate, it's a time deposit with a fixed term, fixed interest rate, specifically designed for IRAs. It functions just like a CD, providing a secure way to grow your retirement savings. The terms and conditions, including interest rates and penalties for each withdrawal, are determined by the financial institution offering the IRA certificate. Let's say you're at the age where you're taking your required minimum distribution, your RMD. You can still have that in a certificate. We will make sure you have your required minimum distribution and you will have no penalty whatsoever. And it can stay in that high interest yield CD. So if you're at the age where you're taking your required minimum distribution, we will not penalize you for having to take your RMD. So again, look at where you have your IRA money and see if it would be a better vehicle to have it here at the credit union. Tax advantages, IRAs, including IRA certificates, come with, tax benefits, depending on the type of IRA that you have, traditional or Roth. You can enjoy tax deferred growth or tax-free withdrawals in retirement, whichever you need most, and your tax advisor will actually be the one to advise you which is the best for your financial situation. They offer stability. IRA certificates offer a stable and predictable investment, which is so critical. The fixed interest rate means you know exactly how much your investment will grow over the certificate's term, just like non-IRA CDs. So retirement focus, since IRAs are designed, of course, for retirement savings, investing in IRA certificate aligns with long-term financial goals. It's like giving your future self a financial high five. Principal protection, similar to regular certificates of deposit, IRA certificates often come, and they do here, with principal protection. Your initial investment is typically safe, providing layer security. So IRAs and non-IRA money are insured separately. So like I was talking about, $250 for your non-IRA, and we can actually, we can structure that to make it more than $250 if you need it. IRAs are insured separately for another $250, completely separate from non-IRA, which is great. You can have non-IRA money here and know that it's completely safe and secure and insured, and you can have your retirement money here and know that it is safe, secure, and insured. So let's talk about some cons of IRA CDs. Limited liquidity, like other certificates, but most people know that, and they structure it to what they can, live without while that money is locked in a certificate. They are locked in, of course, for that period of time. So if you need to access your money before the certificate matures, you could face a penalty. Interest rate risk, while fixed interest rates provide stability, they also mean you're stuck with the agreed upon rate, even if market rates rise. But right now, we all know that rates are higher than they have been in years. Let's talk a little bit about inflexibility. If you're a fan of adjusting your investments based on market conditions, an IRA certificate might feel a bit flexible. So once your money's in, you're committed to the term. So if you're still investing out on the market and that's something that you like and you're not afraid of, then you probably want to stay out there. And we did talk about minimum deposit requirements. It's only $1,000. So let's jump over to money market accounts. We talked a little bit about this in the beginning. It's just another savings vehicle for you to park your money in, where it is completely liquid to you. You can even write checks if you'd like to. But the interest rate, the APR, is higher than regular savings accounts. So of course it offers higher interest rates than regular savings accounts. It provides check writing abilities, just another aspect of savings. And it's kind of like a checking account, offering a balance between interest earnings and liquidity. So if you absolutely have to have that savings money liquid to you, park it in a money market, get it out of that savings account, leave just the minimum balance in that savings. So money market benefits, there are many. One we just talked about, it is the liquidity. Being able to write checks, easy access to your funds. We kind of call it the Swiss Army knife of banking, offering a blend of, liquidity, safety, and a dash of interest. They provide a balance between the higher interest rates, typically associated with investments and the liquidity of a regular savings or checking account. Additionally, money market accounts come, of course, NCUA insured, providing that level of security that you want, need, and deserve. Money market accounts are suited for individuals who really truly want to earn more interest than they would with a savings account with short-term goals in mind. Money market may be a good idea if you're, let's say, saving up for a specific purchase, like a vacation, down payment for a car, maybe a rainy day fund, maybe your emergency fund. We talked about, trying to establish an emergency fund. The money market account would be perfect for that. They're just not intended for long-term purposes like retirement. So the pros, we talked about, the cons. Interest rates can lag. Although money markets offer a better interest rate than regular savings account, they might still lag behind other investment options or vehicles like we've talked about, like certificates of deposit. If you're really wanting the maximum growth for your money, you're going to want to explore a CD. Even if it's a short-term CD, you would probably make more than just having it parked in that money market account. There is a minimum balance. I did want to mention that for money market. You do have to keep a minimum of $2,000, and you do have to open it with a minimum of $2,000. If you drop below that, you're not going to earn any interest at all. So it might as well just be parked in a regular savings account or a checking account. So that's money markets here at the credit union. We always love to tell you that your savings are federally insured. And I think I've probably said this 3 or 4 times throughout this webinar, and it's important. It really is. Because, no one wants to lose anything that they have saved so long for. We are a very strong, sound financial institution. We were birthed in 1935, you guys, and we have been strong ever since. You can go to our website. You can see our history. It is just amazing. It's awesome. It is the best, safest place to have your money. So choosing the right account, that's the key. I'm going to go back to defining your goals, sitting down, doing your 2024 yearly plan. You've got to find it's kind of like finding the perfect pair of shoes. If I'm going to go hiking in the Blue Ridge Mountains, I'm not going to wear stilettos. I'm going to want something comfortable, supportive, and a good fit. And you're going to want the exact same thing for your financial goals. You want something comfortable, supportive, and a good fit for your specific lifestyle. Here's a step-by-step guide to help you make the right choice. Clarify your savings goals. Are you saving for, ask yourself, are you saving for a short-term goal like a vacation or a long-term goal like retirement? The timeline can definitely influence your choice. Understand your income and expenses. This will help you determine how much you can comfortably save, which is so important. Evaluate, so consider liquidity needs. Evaluate how easily you need to access your funds. If you anticipate needing the money in the short term, a highly liquid option might be preferable, like a short-term certificate of deposit or a money market. I've said this before, and I'm going to say it again. Do your research. Research interest rates. We want you to. You are going to come back to us every time. Compare interest rates across different accounts. Look for the best rates that align with your goals. And it's important that you find the financial institution that you trust, that you have a relationship with. I'm not about to put my money in a bank or a credit union that I have no relationship with. If you're already a member, you've already instilled that trust factor. Understand account terms. Make sure you read the fine print, no matter what it is, whether you're doing a certificate, whether you're doing a mortgage, whether you're doing a personal loan. Read that fine print. Understand the terms and conditions of each account. Ask questions. We want you to ask questions, especially if you're considering, certificates. Check for fees and penalties. Be aware. You can go right to our website. Our fee structure is out there, and I'm telling you, it is so short because we are not fee driven. You will not find much on that fee schedule. Remember, the right options for you is going to depend on your unique circumstances and goals. Everyone is different. And take your time. Do your research. Don't hesitate to ask us. I have had so many amazing conversations after these webinars with members, non-members, worked with them for, days, weeks to figure out what is best for their financial future. We truly care about that. You can't get that everywhere. That's almost like having your own personal credit union banker. And I will talk to you about it all day long. Just allow me the opportunity. You can see our CD rates. We are currently offering some of the nation's top yields in CDs. We take pride in this. We truly come together to make sure our members are making the most of the money that they have on deposit with us. We care about your financial future. We have terms from 3 months to 5 years. I stated that a few times. Minimum balance, again, is only $1,000. According to FDIC, the average money market rate is 0.63% as of November the 20th, 2023. So you can see our money market rates are much higher than that, and that's still completely liquid to you. So if you need a little more guidance, we are here for you. There's our phone number. You can choose option 7, ask for Kim Fridley. If I don't answer, you can leave me a message. I will call you back. I'm actually out of the office the next 2 days. However, I will be here the rest of the month until the week before Christmas. So hopefully you all have gotten some really good information, some great resources, and know that no members, no credit union, we truly care about our members and their financial future. So thank you, everyone.
Thank you very much, Kim, for that amazing information, especially what you were emphasizing, that we want to make sure that our members make the best out of their money. So do your due diligence, do your research, read the fine print, of course. But here at the United States and the Federal Credit Union, we always want the best for our members. So if you have any questions, if you have any concerns, like Kim was saying, you can contact us directly at 800-374-2758. And if you want to talk to Kim, option 7. Don't forget that magic number, option 7. And also, before jumping into the questions, I want to give a shout out to one of the attendees, Miss Shirley Rollins. She works with the visa department. So Miss Shirley, we're so happy that you're here this evening with us. We appreciate the support, especially from our colleagues. So thank you very much for joining us. And we hope that you learned something new. I learned something new today, that I need to go through, my savings, see I can get the more juice out of them, So Ms. Shirley, thank you for being here with us. With that being said, we have a couple questions, and for the attendees, right now is the time of questions for us to answer them live. So while we, go through the questions and we do our comments and things like that, please make sure that you write your questions. And if you would like to come off mute, we have some time as well for somebody to come off mute that would like. But let's jump into the questions. So the first question is for the panel. Whoever wants to answer, don't be afraid. But it says, Kim, on several occasions, you mentioned that you may have a penalty for early withdrawal on a CD before its maturity. Could you give me examples where there's no penalty imposed?
Thank you. That is an excellent question. So if you have a certificate of deposit and you need to take an early withdrawal, and let's say it's an IRA certificate and you're getting your required minimum distribution, there would be no penalty. I hate to say this, but upon death, there would be no penalty. So if a member passes away and their beneficiaries come to settle their estate, there are no penalties. And like we said earlier in the slide presentation, we will allow you to take a partial withdrawal. So that means your penalty would be much less than cashing in your entire certificate. If you put your money into a money market account, there is no penalty at all for withdrawals. It's completely liquid to you. You just don't want to drop below the $2,000 minimum balance, because then you're not earning anything at all. You're not going to be, there's no fees, there's no penalty at all. You're just not going to be earning any interest. So there is a minimum deposit of $2,000. I hope that helped. We are a credit union who truly cares about our members. So case by case, if someone had a dire emergency, and it would have to be a dire emergency, you could always call and talk to us. We may be able to waive a penalty for a dire situation.
Kim, correct me if I'm wrong, but I love the story, and I think you do too. Remember, during COVID, didn't we let members withdraw from their certificates and like things like that, where the credit union really comes behind their members? I know that was one example, and everyone got to withdraw.
That is a great reminder, Carrie. Thank you so much for that. We absolutely did. We allowed our members to take whatever money they needed during that crisis, during that pandemic, without any penalty whatsoever. And just to extend on that, we also allowed members to skip payments on their loans without fees, without penalties. We made 35, I was actually in the contact center at that time as the operations manager, and we made 3,500 phone calls. We called 3,500 members just to see if they needed milk or bread. These were our older, longer members. People who, were impacted and could not get out, could not go anywhere. We were willing to show up on their doorstep with whatever they needed. It had nothing to do with their financial situation. We wanted, and that speaks volumes to how much this credit union truly cares about our members. It's a family. Once you join us, you're part of the credit union family.
And to emphasize what Kim was saying, and what Kerry was saying as well about the pandemic, the United States Senate Federal Credit Union truly cares about their members. So we want to be there for your good times, but we want to also be there for the times when you are in need. And we will do anything in our power to help you. So to Kim's point, to emphasize as well, just give us a call, explain the situation that you're going through, and we'll make something work, So as long as you communicated with us, we'll try to do our best. And that's the reason why the U.S. Senate Federal Credit Union is different, is because you don't gotta click option 1 for this, option 2 for this, or you're not talking to like an automated machine. You're actually talking to humans, you're actually talking to regular people that go through the same struggles that you all go through. So just give us, a call, check us out, explain the situation to us, and we will find a solution for you. Kim, what is the least amount you can put in the money market? What is that magic number?
$2,000.
$2,000, everybody.
$2,000.
All
Shout
right.
out. Hey, I want to say hey to Mr. Lucas. Hey, Ken Lucas.
Oh, Mr. Lucas is a faithful viewer of us.
Good to have you here this evening.
NorCal in the house. He's always faithful to us. So thank you very much for being there, always viewing us. So once again, that magic number is $2,000 for a minimum amount of a money market. Now, Kerry, this question is for you. Where on the website are interest rate listed?
I got it. I know this one. USSFCU.org/rates. But go to our homepage and you'll see it right on top. You'll find it. But if you want to type it in, it's /rates. And actually, I could put the link in the chat. I should do that too.
Perfect. So that once again, that link is USSFCU.org/rates. Or you can go to the main page. You can go to the search bar. And as long as you type rates, you'll be able to see all of our rates. And we just want to emphasize, like what Kim was saying on the presentation, we have the best rates in the nation. We just say that. We don't say that just to say it. We actually mean it, because we compare with other financial institutions, and we are truly competitive with other financial institutions. So check our rates out. It's on the website, like Kerry was emphasizing. Milton, do you see any questions on your end? You're a little quiet, so we're a little worried over here,
Yeah, no, I do see a question, and I was actually plugging in some numbers here, just to see, what will happen in the event. So we have the question says, if I have $2,000, it's possible, with no financial goals, but wanting to take advantage of good rates right now. Would you advise opening a 36-month CD? I will tell you, absolutely. Why not? I mean, if you look at the rates that we're offering right now for a 36-month CD, for a deposit amount of less than $100,000, so this will be $0 to $100,000, $100,000. I'm sorry. The rate that we're paying right now on the annual percentage yield, it is 5.23%. So if you want that $2,000 to work for you, I know it will not be a crazy amount, but you know what? It is much better than having that money sitting in an account that is not getting you any interest at the moment. Or if you put it in a money market account and the rate that you get in is going to be less than the 5%. Obviously, key here is that that you really don't have any need for those $2,000. So if that is the case, I would advise go with it 36 months, or even if you want to be a little bit more conservative. I mean, the rate on that 24-month CD, it is also very attractive, which is 5.118 on the APY. So either one of those options, I would definitely recommend. So you won't be making a bad choice if that is the case.
And just to chime in, another strategy that we love to talk about is CD laddering, putting in a portion into each certificate, 6 months, 1 year, 2 year, 3 year, 4 year, 5 year. and you will always have money maturing, that if you needed it for emergency purposes, it would be available to you. So CD laddering is another great way to structure the funds that you have in savings.
And just like how Kim explained that CD laddering, and then Milton was giving advice as to what to do with CDs, that's all you need to do. All you need to do is contact us, and we have great experts that will give you that, advice, like what you should do with your money, or what, we will recommend. But we will always guarantee that whatever answer that you get will be the best option for you, because we want to make sure that our members take advantage of their savings and they make the best out of it as well.
Yeah. And if I may just add, and this is more of a request on my end, but can we make Mr. Lucas a panelist on the next webinar regarding savings accounts or share certificates, because he just hit an amazing point. So for those that have CDs that have, you have, if let's say you have a large amount, and you need to break it, if that is the case, believe it or not, and it is actually true, that the penalty, the fee that you pay for the penalty, can be tax deductible, because that's obviously you pay the fee. That's a tax that you charge, and you can write it off on your taxes. So if that's something that that will give you a little bit of a bigger boost, if you're worrying about what will happen if I break it, what will the fee be, just know that you can actually write it off on your taxes. So there's a tax write-off fee. So and yeah, so don't be concerned. But Mr. Lucas, thank you so much for making that point. It truly is important for everyone to know that.
And I like the fact that the advice is coming from a member, meaning that our members do truly believe in our CDs and our rates. So Mr. Lucas, you think we're joking, but we're not. We actually want you to be on the panel. So be ready, because one of these days we're going to call you off guard and be like, ready, camera, action. So just be ready for that. And Kim will give you a heads up. No worries. We'll give you plenty of time to prepare. So
we know that you feel right at home here.
And then there's another question, I believe. Where on the form 1040 is such a deduction available? I like how our members are interacting with each other, I really like that.
Yes, no, it is. It truly is. He says he's going to need to order a new short. So, hey, you know what? Talk to Eddie and Carrie. Marketing might be able to send you some USSFCU swag. So, there you go. See there, Carrie's highlighting that. But again, truly, we want to encourage you to, if you haven't had the time to go and look at the rates, and as Carrie mentioned, if you go to our website, it's on the home website. Actually, it's going to be right next to the one of the hyperlinks that we have on the top of the website. It's going to be between the option where you can look at the ATM, share branch locations, and careers. It's going to be right between that. Better yet, it's going to be right above the link to click for online banking. You'll be able to see the option there for the rates. So with that being said, if you have yet to haven't looked at the rates that we have right now, it truly is, I would like to invite everyone to check and see, and not just check them, but take advantage of the rates. It truly is. We really take pride when we say that we have the best rates in the nation when it comes to 24 months and 24 and 36 months, and that's how confident we are. And we know that if you do come to us, you will be making the right decision. And I guarantee you, especially for those that have, a higher amount, if you want to bring it over, the rate is going to change based on the deposit amount that you do. And unlike other financial institutions, I don't want to say names, but we do not put a cap. We do not set a limit for how much you can bring. There is no limit. However much you want to deposit, the rate is guaranteed depending on the term that you choose. But we will not offer you a very nice rate and tell you that, the most you can deposit is $5,000. We will not do that for you. That's not what the USSFCU is about. We're actually, we want to make sure that we're doing, the right thing for all of our members. And again, like Kim alluded to, no members, no credit union. So we are here to serve you, and we want to make sure that we put in the best products to your houses, and we want to make sure that you take advantage of that. Eddie, anything else you want to add?
Did you
one
see the nice comments about Kim? Yeah.
Hi, Mrs. Bell. It is so good to have you
Read
on
it,
here this
Eddie.
evening, and thank you so much for those kind words.
Eddie, read it so the audience can hear.
So the comment Ms. Bell said about our amazing Kim says, I would like to applaud the individual attention that Kim provided me on future city investments. Truly, I bank with several other federal credit unions, and no other ones have provided such customer service. Kim, thank you. So that's just to emphasize.
It's a true honor. It's an honor.
That's what I was saying earlier, that when you contact us, you're not talking to a machine, you're not talking to a robot, you're talking to an actual person. Especially each one of us, here on the panel, we want the best for our members. And Kim is a true testimony of when it comes down to, people caring about people, and we care about our members. And Kim, I don't know if you want to reply to Ms. Bell.
Awesome, guys. That's amazing. And again, thank you. That's the feedback that we love. That's one of the reasons why it makes us excited to come in and I'm sure this is a boost. Not that Carrie needs it, but when she's creating all this content and then when either Kim or myself or any other special guests that we have, it truly makes it exciting for us, especially when we see the feedback. So with that being said,
Somebody's asking what's next week. What's the topic next week?
So
that's what I was heading. So next week webinar is going to be spread joy and save money. It is the holiday season, so we want you to make sure you're savvy when it comes to making those decisions. When you're going out and shopping, we want you to save. We don't want you to go broke. I know that oftentimes you might get a little happy with a credit card. And so if what you're looking for are ways and tips on how you can save money and make sure you're making the right decisions while doing it, I'm sorry, please come in and join us next Wednesday. It's all about spreading joy and saving money at the same time. So we highly encourage everyone to attend, and also spread the word, share it with your friends, with your families, neighbors, everyone. And we truly love to see new faces. And I just saw a comment for someone that this was her first webinar and she really liked it. So thank you so much, and we look forward to see you again in another webinar. And with that, I will also I'm a little sad, but I'm actually going to be missing next webinar because I'll be on a little trip out of the country, but I should be back for the week after that. But you'll be in great hands. Eddie, Carrie, and Kim will make sure that they provide an amazing presentation like they always do. So, but with that being said, I'm not sure if anyone has anything else that they want to share. I think Carrie, you do.
I was just gonna say that I'll send a follow-up with the slides, and then we hope to have the recording available on our website in a couple days. So someone had asked if we'll share it again. So yes.
And I believe I just saw another question that came in. How to make the best holiday cookies. I think Kim might be able to share that with you, Mr. Lucas. So I'll be on the lookout for that, or even marketing. I'm sure Carrie might have a recipe book somewhere.
I don't cook.
Oh,
or bake.
Well, I know Kim likes to bake, so just be on the lookout. But with that being said, panel and everyone that attended, thank you. We hope to see you on the next webinar. You'll have a wonderful evening, and see you soon.
Bye, everybody.
Holiday.